This presentation is about money market. Money market is a market for trading of short-term securities where the short-term funds are loaned and borrowed. Short-term securities refer to the securities with maturity of less than a year. These are the example of the securities or the instrument of the money market. Okay, and these securities or this instrument usually has this characteristic. First, they usually have high liquidity. They have high liquidity because of they are short-term in nature. Therefore, it is easy for investors to turn these securities into cash. And these securities also have low risk of default by the issuer. And because of low risk of default, usually the interest earned is also low. And however, these securities have high marketability because of they are quite liquid and they are traded for short term. Therefore, the marketability is also high. Okay, the objective of investing in money market are stated here. Okay, first, it maintain the appropriate level of liquidity. This refer to the investors as are able to maintain appropriate levels of liquidity because when they invest in money market, okay, most of the securities are short-term in nature. Therefore, it will be easy for them to turn their asset into cash quickly. Second, investors are also able to adjust portfolio over short horizon. And for a central bank, investing in or involved in the money market enable them to implement the monetary policy and also enable them to funding the debts by raising securities in the markets. Example, government raise funds via the Malaysian government securities, via the issuing treasury bills, as well as issuing the Bank Negara monetary notes. Who are the participants of money market? So these are the participants. Central bank basically is the regulator, or they are the issuers of the security, as well as they are the investors of the securities in the money market. Bank, whether it is a commercial bank, investment bank, or any of the non-bank financial institution, they could be the investors, or they could be the issuer by issuing instrument like the negotiable instrument of deposit, or they issue repurchase agreement, or they issue bankers acceptance. Corporation also could be the issuer, or they could be the investors. Brokers and dealer will be the intermediaries between parties in the money market. They help to transfer the money from surplus unit, which are from investors, to the deficit unit, who are the issuers of the securities. Last but not least, we have this individual as investors in the money market. Let's move to the explanation on the instrument in the or security traded in the money market. First, we look at the negotiable instrument of deposit. This is a deposits for fixed period that are negotiable and guaranteed by the bank. So investors who invest in this security will be given a certificate, and they become the bearer of the securities, and they will hold the security up to the maturity before they can withdraw. They can get the principal amount back to them. Okay. Second instrument is the Malaysian government securities. It is a long-term coupon-bearing bond issued by the government to raise funds to finance the government's development, expenditure, and working capital. Okay. Third instrument is repurchase agreement. Repurchase agreement is the contractual agreement between two parties. One party agrees to sell security to another party at a specified price with a commitment to buy back the security at the later date. Okay. The first three securities are the yield securities, where when investors invest in these securities, they will be receiving certain interest on the for their investment. And the rest of these, three of these are the discounted instrument. Okay, discounted instrument means that they are the non-interest bearing instrument, where investors do not offered with the coupon payment, and these instruments are discount from the par value. Okay, so let's look at this discounted instrument, which is the treasury bills. Treasury bill is a short-term securities issued by government to raise a short-term fund to finance the government's expenditure as a working capital. Banker acceptance is a short-term instrument issued by a firm that is guaranteed by the commercial bank, usually for international transaction purposes. Last but not least is the Bank Negara monetary notes. It is a short-term securities issued by the Bank Negara Malaysia for managing liquidity in both the conventional and Islamic financial market as a liquid asset. Okay, So that's all for this presentation.